Good morning, guys. G'day, Vin. Just read your comment, mate. Cheeky. Yeah, so I'm just playing around at the moment, getting myself organised. So, welcome. Might as well get started. All right, guys. Welcome to Trade Setup. What do we got now? Just the morning overview. What happened overnight? Not a lot happened overnight, to be honest. Is it coming through clear? For some reason, I've had problems with all my stuff at the moment. Have to do a talk, I think, next Thursday, a webinar. So I know that things will go haywire for the new group, so that's going to be fun. Going to make sure it's all up and running properly before then. G'day, Lauren. Hope you had a good Friday, mate. Did you guys keep it under wraps? Keep it in control? Just take a look at where we're at the moment. Yeah, so right, let's just get stuck into it. We've got overnight action, not much really. The S&P, or the broader market S&P, and the Wall Street, or the Dow. I keep calling it Wall Street because of the CFD, but the Dow futures are well contained, or Dow index is well contained, pretty much for most of the session, right up until the dying minutes. If we go just up here, I'll show what I'm talking about. So that was, you can see this price action the last half an hour trade. Kicked up, and I think, where's the open? So that's about the open on this candle here. And you can see it pretty much oscillated between gains and losses, only minor right up until the last 30 minutes. So it's a bit of a pop. Yeah, I would have loved to have gone, mate. It's just Friday night and Saturday morning, Saturdays are pretty much hectic for us. Did Helen keep herself in check? Helen and Bitwise? So it gives me the giggles. I'm easily amused. Generally, I'm by myself every day. Yeah, so well contained. That was the S&P. The Dow, you can see, Dow was edging high in the last half an hour or so to get a pop as well. So I just think maybe that was a bit of short covering into the close, because people were trying to short it, thinking that we'd get that second move down, but we didn't. It was well contained. And don't forget, we've got interest rates out tonight, so FOMC. What are they at 4 o'clock? So quick look. No, 12:30. Oh, sorry, yeah, it is 4 a.m. So 4 a.m. well, Sydney time. In the next trading session will be FOMC. They're expecting a cut of 0.25%, which is pretty much well and truly on the cards, I'd say. It's not so much the cut that they're looking at. It'd be the Fed Reserve. Which way do they vote for coming rate cuts? Now, I think there's a lot of them. It's going to be a tough going to put interest rate, to talk up interest rate cuts going forward, and see what the market factors in, purely because the numbers haven't been coming out too bad. If they're going to do it, it's more because of Trump's bullying, I think, more than anything else. He's wanting interest rates lower, but the problem is US data's coming out and it's not so bad. The thing that would be crimping it is the trade war, and that's probably the one and only reason why they would add more cuts to the US economy, because if you just go back, and even overnight, industrial production figures come out better than expected. So they were still down, but I think were they still down? No. Actually, we'll just take a look. Let me just see what they were at. Where are we? 11:30 industrial production. So it was up. So the previous was down. They were expecting up 0.2 and it came out 0.6. So that's stronger than expected. So that's probably why you got a bit of a drop off in the US dollar. The US dollar seems to be gaining on rate cuts because of the economy and problems. But they got knocked on the head a bit, and it's more of a safe haven easing out of the US dollar as well. Whereas gold is actually holding up pretty well. Let's take a look at gold now. This is what I'm seeing on gold. So we had that little spike, which I wish I traded that. It would have been a cracker. But that comes screaming back down again. We've got this retest of this zone, which we've spoken about quite a bit. And that's that zone from previously when the data loads. There you go. You can see that zone is holding up. It got broken a bit and then it's bounced back up. And we've got this lift bounce. We tried to lift again, just couldn't do it. Straight back down into that zone. And we got some more buying that's coming in. It has been coming in after this sell-off. So from here, I'm looking for this zone to hold up around, say, 1496, which equates to about 1510 or so on the futures. And you want to see, and this support around here on the CFD is the same as about 1500 on the futures. So if we can hold up around that 1510 or so, buying some support, and you see buyers start to lift price again and pop it up through 1507, which is probably $6 or $7 up, then I think we could get a move back up to 1550. And you can see gold stocks are actually holding up. They rallied yesterday when the overall market rallied, so that's kind of a bit against the grain, which is unusual. So we've got the Aussie. Don't mind my numbers here. I haven't deleted them. That's just I'll show you in a second. So what I normally do is take out on the charts and just mark up all the different things that I want to mark up, entries and bits and pieces that I'm taking note of as I'm going forward. So I'm going to have to delete this now so we can see that in a sec. Where am I? Gold. Aussie played out well. So Aussie, we were talking about this getting heavy yesterday, and it got smacked. And it was on the back of this push down was at 11 o'clock. So prior to the number, we broke that support, and RBA and housing data come out. Well, housing data is a little bit weaker than, well, still weak. And that's given the Aussie a bit of a knock on the head, pushed it down, but it went ploughing straight through that key support as well, which is previous lows. We've got those lows. That was at about 68.50. So they got knocked down, but then the US dollar rallied overnight. So this is coming about 11:30, I think, on the market open, and the Aussie just popped as the US dollar dropped, not popped. So interesting. That's straight back to the start again. So we've got this zone still holding up. If we can crack below, let's just say on the Aussie, if it can't hold up, if we get a bit of a sell zone in here, if this holds as a sell zone, because it's still the anchor's not broken just yet. It did react off there, but if we pop up and we push below, 68.60 say, this anchor to this uptrend, then this could be another sell-off. And then from there, we just have to check out what the longer-term charts are saying, where it could go to. But that's, to me, that's your key break of that level there, 68.50. This potentially is going to be a major lower high, and that's going to be a squeeze. Could go a lot further. As a guess, let's just measure that, say, it's about there. Could be looking at somewhere around 68, say 68, and that brings us right into the support zone. If that's the case, and that's just that leg down, good correction. If that holds, we could be expanding down or extending down to sort of that 68 zone. No worries. All right, so that's the Aussie. That's going, well, it was a good trade on yesterday. Managed to get a little bit on, but out. I think I got chipped out somewhere around here. Would have been stopped out late in the session. Now, what else we got? Let's just take a look at Wall Street. Not much is happening on there. Like we said, it's just going to chip around until FOMC announces a statement at 4 o'clock, 4 in the morning. I wouldn't expect too much to happen between now and then on our market. If you're going to get anything, you're going to get a wash out of the highs, I'd suggest, on the ASX. Bit of a spike high. Just continue that trend high, spike high, see what happens tonight and react tomorrow. If not much happens, if the US comes out and doesn't, or they don't talk up further rate rises much, or they talk up, they're all sort of, it's a 50-50. So at the moment they're divided whether they should cut rates further or not. And that's what makes it tough. And the numbers have been supporting no further rate cuts. So it'd be interesting to see how the market goes, where I think the S&P is about 1% from the all-time highs again, which no one really expected not long ago. And it has just powered on back up to the highs. So you don't be surprised if we get a wash out of those highs. It rallies quite hard through the highs. Fed comes out and doesn't talk up rates, is not very bullish on rate cuts, and the market gets smacked because they wash out the highs and then come screaming back down again. Don't know, but there's a potential that it's getting set up that way. And look at, so you can see the highs are not too far off actually, and we nearly got there just recently back in, what was it, the 13th, the start of the month, or only about 5 days ago. We nearly got back up through those highs and then come back down. If this can't hold, if we do extend up and come screaming back down, look, it'd be interesting. Otherwise, I think the market has just been, the US and globally has just been soaking up any talk of stimulus. I just don't get that the fact that there's stimulus is not a good thing for the economy. They don't stimulate a growing economy. They stimulate because of concerns, and the market's just lapping it up. Every time there's talk of stimulus, bang, up we go, up we go. Sooner or later, that's going to run out of steam. I think the party's going to finish, and people are going to get caught on the downside. So what really this market's doing is building all the longs up. Building them up, build them up, build them up. You need to get that euphoria. For example, just drop it down. This is a 30-minute chart. Imagine the euphoria once we get up through there. Oh, if we do, of course. If the market pops up through that high. Actually, just look at this. Look where this level is too. A lot of the times they'll pick a level that won't be this high because that's not so much a key level. This is essentially to me a double top. So you take it off this level here. It has touched on that level. We could be building a lower high now. But just imagine we do power up through those highs, get into all-time highs in the US. Imagine the euphoria after this rally. It's all over. We're doing well, blah, blah, blah. Everyone holding long positions that are doing well. Just think of all that fuel that's built up for, potentially a smacking down again. Not saying it's going to, but there is potential for that. DAX, much of the same action. That's looking more heavy. You can see this. It's built up some... essentially a double top or a resistance zone, a sell zone, a liquidity zone, which we talk about, up near these highs. A lower high that's built at around that 12,415, and we're starting to come off again. So it'll be interesting to see whether we do come off a bit more on the DAX. I mean, like I said, the UK's potentially, if this breaks through that 72.85, this overall uptrend is coming in under pressure. All right, that's it. Let's just see where the SPY has opened. I'll get that up and just see what's going on. 5 minutes. So we've got the 30-minute chart. And don't forget, anyone that trades a SPY intraday, I think it's the last, is it today? It's the third Thursday of the month, which is tomorrow, that it rolls over. So September, it'll be rolling over to the December contract. So today is probably the last it's the last day session you'll be trading on the September contract. And if you trade it overnight, just be careful because they can muck around with it. And that's why we might not do too much coming into the close today because of the futures. And tomorrow will be an extended open. So if you're looking at it, say, quarter past and we're only half open, that's why. You're getting that extended open on, I think it's from 10 till probably 20 past 10 or thereabouts. 20 minutes past 10 tomorrow, and that's just extended open for the futures contract for settlement, to give settlement for the futures contract. So just bear that in mind tomorrow morning. So it could be a lot of fun tomorrow if we get, the US gets smacked around a bit tonight. You'll probably find you wake up tomorrow and nothing will have happened. And then everyone resets themselves as long. So it'll be interesting to see. The SPY, so we had that power up after the data released at around 11:30 yesterday. So the market was looking a bit tentative. You can see that starting to push over. Let me just get that open. So we opened here, I think it was. No. So this was the open. Let's just draw that. Well, if you can see that. That was the open yesterday. It pushed down. It was starting to look a bit negative. Then data come out. Boom, up we go. Big washout of that little zone down here at around 68.50. And we popped and went straight back up through these highs at 66.88. So the market was strong into the close. Pretty much after that, we just chopped around. Held the lows, well, pretty much retested 66.88 and retested the lows overnight. Retested those highs from the day, which was, what was that? Well, actually, it was the overnight high, wasn't it? So we sort of were contained around 67.06 and the lows at 66.88, chopping around a bit. And the open has seen a bit of the same. Now, don't be surprised if we sort of hold here, hold a higher low, and then power up through the highs at 67.06. I would look at more of that as a washout. I don't expect some serious strength today. I'll be surprised, but I mean, you can get surprised every day of the week. You just think the market's going to do one thing and it does something else. So just bear that in mind. I would expect, after not much happened last night, a bit of a pop into the close. I think that's just getting buoyed into the close. We're getting buoyed into the close as well. If you look at yesterday's action look at the ASX, we're down 0.8. Look at that close. It closes at 4 o'clock and the match up. So it was pretty much neutral. It was up about 5 points coming to the close. After this sell-off, got buoyed, 5 points into the close, and it matches up 15 points. So it's been doing that a lot lately, and it seems to just be ramped up into the close, trying to lift that market higher and higher and higher. And look, I'm just being a speculator. Wouldn't have a clue what's happening, but I don't think that's your bots and all that sort of stuff mucking around the market too much. I think it could just be. I think if anyone's read, there's a lot of ETFs. There's talk now that they could be a major problem because coming into the close, if it's a low liquidity market, which I think it's been lately, if they've got to reposition themselves at the end of the close where they can get the liquidity, if people have been buying up, say in the STW, they've been buying up on your other ETFs, it's got to sweep the market on the close. And it can sort of distort a lot of the closing prices. Now, it can do the same thing on the way down too. So, and I think there's a lot of liquidity if they start hammering those STW and your other ETFs, call it your mid cap ETFs and your large cap ETFs and all this sort of stuff. There's a lot of liquidity coming out of the market through that as well. So I want to do some more research into that because I think if it's a potential problem, any sort of downside move, any serious downside move could be exacerbated. That's a big word for me, by the way. All right, we got 10.03. The market's up 4 points. We're expecting up about 10, give or take 5 to 10 points on the open. Let's just take a look at. Let's keep an eye on this futures. And the futures is sort of below where they close at night. The overnight close was up to around 67.03 and it's down 6 or 7 points. So either one of these two, this is either a buy down here for a pop as the ASX holds into the open, or it's looking more likely that this ASX is not going to open up 10. But we'll just see what happens. All right, guys, any questions there before we wind it up? So for me, I'm not looking at much today. It's range bound in here. I don't really like it. It's quite a narrow range, really. By the time you get a setup, I wouldn't expect I would be getting too much. And the bulk of my setups were based around momentum. When you're trying to trade an extended area, which I think we may have talked about, we were talking about a while ago, inside out and outside in. So an outside in style of trade when the market's extended, you need it to pop. You need it to pop, catch a few people off guard, then you get the bit of a pullback. Or it's going to wash out people one side or the other. I mean, it could happen. It could happen if it spikes up through these highs and gets those stops, triggers the buy stops. If people are shorting into that level, triggers them. It could just stall and then come back into the range. We don't know. There could be an opportunity there, but at the moment, I don't see much opportunity just yet. All right, guys, have a good day and stay safe. Don't forget, we've got 4 a.m. tonight. There's a big one. And a lot of people are just focused on that US dollar. I don't know. I mean, it's really hard to say what they're going to do, which way the market's going to react. I'm sort of inclined to be it's like a drug addict, on a stimulus drug addict the market is at the moment. Every time they talk it up, bang, off we go. And if we don't get that stimulus which they want, or they expect via rate cuts in the US, then it could be a bit of a tipping point. I'm not trying to be bearish, but for me, the risk when you're up near all-time highs is downside. It's not. I don't think there's the upside risk just at the moment. I mean, we're loaded long anyway, so it doesn't really matter. So if the market goes up, fine, great for us. And I guess most people here too have probably got a fair few long positions on. They're just taking advantage of this pop. Now, you always got to assess your risk, and if you're loaded long, your risk is to the downside. If you're loaded short, your risk is to the upside. So you just got to keep assessing that opposite risk. If nothing changes, great, you don't have to do anything. But if things start to change, then you've got to take action and know where your risk is for individual positions. That's why I'm always sort of looking at what could happen potentially on the downside. Don't care about the upside. If it keeps going, good on it. But for me, I'm just trying to assess what could be the risk for a sudden shock to the downside and where could that come about. And it could be tonight. Nothing may happen. We don't know just yet. So anyway, stay safe, guys. We'll talk again tomorrow morning, so I'm sure we'll have a bit to talk about. Anyway, enjoy your day. We'll speak to you then. Cheers, guys. Bye.